Get ready for one of the most in-depth analyses you've ever seen on China's automaker giant BYD's imminent challenges with financial expert AJ. AJ has been sounding the alarm on BYD for 2 years, highlighting their unsustainable dumping strategy and lifetime negative cash flow, trailing Tesla's $16.1 billion of cumulative free cash flow since 2010. He's also flagged BYD's 72% sales drop for the Seal model and questionable battery auto segment reporting. Join us as AJ unpacks why BYD's market share chase could spell failure, and we'll compare that with Tesla's strength. AJ has a background in finance and physics. Before he became active on X providing independent financial research, he retired from investment banking, where he advised public companies on mergers and acquisitions and other capital market transactions. AJ will be speaking to us off camera since he prefers to stay anonymous. Welcome back to the channel, AJ. I appreciate you.
Hi, Robert. Thanks for having me back.
Always appreciate you joining us because you're one of the few that does deep research. And this analysis, you've been following, in this case, BYD. You've done a lot of other companies also, but BYD, you've noticed that, 2 years ago. And only now, in just the last week or two, we started to see more and more reports kind of showing some of these key metrics that seem to be off. We'll see what's going on, but you're going to show us a little bit more, much more deep dive. Let's get started. Thank you, AJ.
Yeah, so before we get into BYD, I thought we have a quick look at Tesla's latest numbers, which just came out today. So on this first slide, we can see the vehicle deliveries, and actually they came in much better than I had expected. However, the mainstream media will point to the year-on-year decline, which is 13% in the second quarter, and the first 6 months of 2025 also down 13%. So and this year so far, Tesla sold, quote unquote, only 720,000 vehicles. But by the end of this presentation, you will see many of the underlying drivers why Tesla is, first of all, not the only one who is hurting, and what's going actually on in the automotive industry. So with that out of the way, let's have a quick look at deployments. So deployments also down 8% quarter over quarter, but up year on year a little bit. Deployments is always very lumpy, as the CFO has told us many times. So I expect for the rest of the year actually a significant increase, and also these numbers are also not bad at all. Tesla is up 49% in after the first 6 months. So this is also a very strong number. Already deployed 20 gigawatt hours, and if Tesla's guidance comes in on the money, we will probably end up with over 45 or 46 gigawatt. So there's a lot more deployments to come in the second half of the year. So this is high level sort of what was moving sort of the Tesla community today. And then here I just wanted to look at what this means like long-term for Tesla's revenue trends. So this is based on my modeling, which reflects everything: robotaxis, bots, name it. And so this year will be a little bit lackluster. 87 billion revenues, what I forecast, which is 11% down on 2024. So not great, but then 2026 things are improving, and then 2027 it takes off, and this is because then Tesla's various new products are scaling, the robo ride-hailing network, semi, other vehicles, etc. Gross profit, similar picture, is going to be down over 2024, but then from second half of 2026, things are really starting to pick up. This is what you should take away from this slide. And then when you look at sort of the earnings picture, also similar this year. Just write it off in your mind as an investor, because good things are coming next year. And always keep in mind, valuation is always forward looking. And Herbert and I talked about this a lot in our last video. This is the key. So it's not about, so by year end of 2025, it's not about earnings this year, it's about the next 12 months at that point. So when you look at these numbers, and by the way, these months, it is as of the reporting date, it's all about these numbers, and you can see they're picking up materially, especially in the second half of 2026, and then they take off in 2027. And then the problem right now with Tesla is that because these earnings this year are so low on the next 12 months basis, the implied multiple at the roughly $300 share price right now, I think 315 or something we are at the moment, the implied multiple is very high. So if you look at this chart, the median multiple at the moment is 149 times. So this is really, really expensive. Just for contrast, someone like an Nvidia is right now roughly a 35. Apple, um, some of the other tech stocks also roughly ballpark in that range. So you can see Tesla is very, very expensive right now, but for good reasons. And this chart brings it all together. This is my earnings forecast plus the multiple. We discussed last time, Herbert, how this
Mm-hmm.
works. And this is an essential tool I always share with my subscribers because it gives you on a quantitative basis, taking everything in the sentiment in the community, investor community is reflected in the multiple. The earnings are reflected in this chart. It shows you on a quantitative basis where roughly the share price trades. I use this tool all the time because I just want to say it out loud. There is no shame when the market becomes too greedy to reduce the risk in a position, and when the market panics in fear and sells everything, there is no shame in adding. Just want to point this out. This is how you make money in financial markets. And here's just one receipt. I trimmed. I did not sell my entire Tesla position, but I trimmed at 357 using this method because I saw 350 was around about here. This was outside the range, and I right now don't see enough immediate catalyst. So this was the right move. But this is not the point of this presentation. The point is that you should always consider the valuation level. So this one and the earnings outlook. These two things you always have to keep in mind. And then if you want to combine the two to make it more, to make it less abstract, you need to do something like this. And this is an essential tool for my investing. So then we leave Tesla just as a bit of background. So Tesla has a few rough quarters ahead, but the outlook is very, very strong. So I still expect Tesla to be a great investment. But you need to be sort of prepared what's going to come. Not all hell will break loose, but you have to keep in mind. And as Elon said, 2026 is a transition year, and but the point is, you should not say, "Oh, I should just stay in the sidelines," because by the end of this year, people will start pricing in a much stronger 26 already. So this is strategically how you should think about these things. So now we move to BYD, and as a start, I just wanted to plot the global EV landscape. And by the way, these are not the latest sales. BYD has now taken the number one position, so this is not correct. But this is as of the fourth quarter of last year, the 2024 numbers. So this date down here is not relevant, and I didn't have time to update it. But the point is, because first we are right in a bad timing because the quarter just ended. So in the next 2 weeks, we get numbers for most of these companies, but they're not available right now. So anyways, so the point of the chart is to show that, first of all, the Chinese are a really important player. There are a lot of them. You see it's down here on these flags. Then secondly, there is some concentration in the EV market. There's some very large players. BYD, as I said, is now the number one in volume. It's a very important point. And number two is Tesla, and Geely will soon exceed VW, and VW will be four, and so on. And the Chinese grow volume very quickly. So all these flags that you see down here in red, they will be moving to the right, and
To
the
the
rest
left.
will, sorry, thank you, Herbert, to the left, and the rest will move to the right. So this is overall positioning, BYD. And here is just something to really point out. What you see is something I shared before with my subscribers. I warned them BYD was overvalued. BYD was up 56% in May. I posted this analysis, and you will see part of this later in this presentation. And in less than 2 months, BYD now trade down 18% because I think market is waking up that there's a lot wrong with BYD, and I will cover the key things that you should take away about BYD. Because
Mm.
the reason why this is important to me is because often when I read stuff in mainstream media, they always try to play BYD. They always try to compare Tesla and BYD, and I will demonstrate here that this is this is the wrong comp. And
Mhm.
so with that out of the way, just high level, BYD is a company that makes over 100 billion in revenue already. This is quarterly revenue for the last 3.5 years. First quarter, 24 billion, 36% year-on-year growth rate. So really great growth numbers. This is what people will always talk about because this is the easy stuff. Then also long-term perspective, we zoom out. This is now annual revenue since 2005. Um, 2005, BYD made 1 billion in revenue. Now they make over 114 billion is last 12 months as of March. So huge growth rate. I also marked when Warren Buffett invested first in 2008, and then he started trimming in 2022. This chart is also very important. It shows you the business mix a little bit. Just this is all just to set the scene for what's to come.
Yes.
So 21% of revenue is actually not related to batteries, not related to orders. It's mobile
Hmm.
devices.
Wow.
BYD does some assembly work for mobile phones and his other electronics stuff in the business model and a bunch of other things. And then 80% is battery and autos, so 67 plus 13. The split here is just about China and non-China. This is very important to remember. So 67%, so two-thirds of total revenue is totally concentrated in China, auto, and battery. This will be an important point to keep in mind for later. Then let's look at the vehicles. So this is what everybody talks about, and for good reason. If you look down here in 2022, total vehicle sales, this comprises battery electric vehicles and plug-in hybrid vehicles. BYD makes almost no other type of vehicle, so only BEVs and PHEVs. BYD sold just under 1.9 million, grew to 3 million,
Hmm.
63% growth, which is insane. They
Same.
added over 1 million in
Mhm.
sales in 1 year, which is completely nuts. And then they did the same or even more in 2024. They added over 1.2 million sales. They added. This is completely nuts by automotive standards. And I think every auto CEO would agree with me. And then this year, in the first 6 months, they already sold over 2 million vehicles and sales are up 33%, but sales are slowing. Here you can see the quarterly year on year is up 16%. It is still strong. You can ignore the Q on Q because Q1 in a China heavy automaker is always weak for Lunar New Year and winter season. So look at the 16%. It came down significantly. 40, 38, 59, 60%, and now 16%. This already gives you some sign that maybe something is up. Forget this number. This number is driven by various shifts we don't get into because it would take too long and we wouldn't get through the materials. So long story short, there are already signs here, even though it's still super impressive.
Mhm.
There are signs, early signs, something is changing. This chart now just looks at just pure battery electric vehicle sales. Same story. Crazy growth, but you can see 2024 it already slowed massively. So you go from 74% to 12%. So there's a massive slowdown. When you look here on a Q on Q, year on year quarterly growth rates, huge growth in 2022, 2023, and then it slowed down. But interestingly, in Q2, it picked up a lot. And then when we look at this chart, ignore the red line, the blue and kind of let's call it green color, show PHEVs and electric vehicles. You can see that so this line increased nicely, electric vehicles, then kind of flat line. This is what we just saw in the growth numbers, and then increased again. This is here shown not on quarterly, but on a trailing 12 months basis. So when you add these numbers together, 2.7 million, and let's call it 2.1 million. This is total last 12 months sales of BYD. So BYD is already at a 4.8 million run rate sales rate, which basically makes them the I think the numbers three largest automaker by volume in the world, because they will be replacing Stellantis very soon, or they may have already replaced Stellantis if you strip out JV cells. And this red line now just expresses uh, PHEV sales as percent of BEVs, because often there's a confusion. Some people think, oh, BYD is all about electric vehicles. No, this is exactly what this line shows. Every time this line is more than 100%, this means BYD sold actually more PHEVs than battery electric vehicles. It's just a point, just to clean this up. So now we get slowly to the meat of the matter. Now we look at a gross profitability. This looks actually pretty good. A 20.1% gross margin is actually quite good, as we see in a moment. And by the way, listeners, don't believe me, just look at the data. If I do a good job, you don't need to believe me. You will come to your own conclusions just by looking at the data. So this looks actually pretty good, but we need to benchmark this to have an understanding. How does this compare to the auto world? And this is what this chart does. So here, this huge red arrow marks where BYD is. Sorry, it's a very crowded chart, but there's no great way to show this over time. So you see the last roughly 3.5 years, BYD is right here in the middle. This group here is the resulting number if you add up the gross profit of all these companies and all the revenue, and you work out this group's total gross margin. This is what this number shows. It's 20.0%. So BYD is just above, let's call it the middle. And there are just a few guys above that. GM has a very high gross margin, BMW. And by the way, this gross margin is on a consistent basis. A lot of people make a mistake when they do this type of benchmark, because automakers, they sometimes put R&D expense in gross profits, and sometimes they exclude it. And this chart is always excluding R&D expenses. For example, Tesla shows gross margin in this way. Tesla shows R&D expenses below the gross profit. Just as a little side note, so this is all consistent, and you can see that BYD benchmarks quite well. It's better than MBG. MBG is Mercedes-Benz, Toyota 18.9, Ford 17.8, Tesla 6.3. Xpeng is a smaller, let's call it medium-sized Chinese player. Nissan is in big trouble. 12.1% is really bad for an automaker. SAIC is basically the Chinese version of Nissan. It's a legacy automaker, very large automaker, but performs terribly well. Terribly poorly. And then Stellantis recently fired their management because the business is like in emergency mode, and NIO has been a long time underperformer, 7.6%. So anyways, so if we now isolate everything, this is the trend. So now this is the exact same chart. I just removed all the companies. I'm just showing the total group, and you can see there's a downward trend. And people might say, oh, AJ, well, it came down from 20.5 roughly to now 20. What's the big deal? Keep these numbers in mind. This is actually a really big deal, and we get to it in a second. So gross profit. So, and just to make very clear what gross profit margin means, it means how many cents per dollar of revenue is left after you paid for making the product. And so a 20% gross margin means 20 cents of every dollar of revenue you generate is left to pay for all the other stuff. All the other stuff comprises OPEX. OPEX is R&D expenses, admin expenses, so marketing, selling, general, payroll. So basically everything to keep the company running except for making the product. So with that out of the way, we go to operating expense efficiency. And this chart basically makes absolutely no sense if you believe in what you learned at university when professor told you, oh, there's something called economies of scales. The larger you become, the more efficient you become. This chart shows precisely the opposite.
Mm.
As we looked at earlier, and that's why I showed you BYD's huge revenue growth.
Mhm.
BYD became actually less efficient. So for example, if we look down here in the second quarter of 2022, or let's take the first quarter, it was 10.7%. So 10.7% of revenue was spent on, let's call it, overhead expenses. And by Q1 2025, overhead expenses grew to 16.8% of revenue. So in other words, the larger BYD became, the less
Mhm.
efficient it became. So this is a key initial observation, but it still doesn't tell us about the underlying driver. So to understand the underlying drivers, we need to decompose this these percentage rates into the subcomponents. So look at the 16.8. The 16.8 is the sum of 8.3, 3.6, 1.9. So these are all the subcomponents of OPEX. So you have R&D expenses, selling expenses, admin, and then there's tax and surcharge. This is like a Chinese thing you don't have in European or US companies typically. But anyways, so ignore that. So you can see that selling kind of at 3.6 fine is basically flat,
Mhm.
actually came down. Admin expenses, similar story, yes, it's
Mhm.
moved up a bit, but it's not a major needle mover. So what was driving this was clearly R&D expenses. Here, Q1 2022, R&D expense 3.5% of revenue. Now they're spending more than double. So this was the main driver of the operating expense inefficiency. And now we get to why this is a big deal.
Mhm.
This is operating margin. So operating margin is, and now I jump a bit. You take BYD's gross margin 20.1, you deduct the operating expense efficiency 16.8, and the residual is this operating margin. So once you paid for everything before taxes,
Yeah.
um, this is what is left over in BYD's business model, 3.3%.
Mhm.
And here again, the question is, AJ, is this good or bad for an automaker? Let's look again at the industry. Here, this chart is kind of messed up because we have some super loss-making companies like NIO. NIO's
Mhm.
operating margin is negative 53%. So in the next chart, I take them out. So the chart is now, it's still very hard to read, I'm sorry, but
Mhm.
now it makes a little more sense. You can see now BYD, before BYD looked just above average, right, at gross margin when we looked at it, but now he had operating margin, which is much more important because it's much further down the P&L. It doesn't look that great. It's only at 3.3. And here I mixed up the labels. SAIC should be above BYD, obviously, at 3.4. Even SAIC, which is really underperforming, has a slightly higher operating margin. And Tesla, we know Tesla's margin came down for various reasons. 1Q wasn't a great quarter. Honda is struggling. Ford also, various things depress the operating margin. Nissan is in shambles. So this is really bad territory for an automaker. And people who are kind of leading the industry right now, BMW, Toyota, Hyundai, General Motors, Mercedes-Benz Group. But Mercedes-Benz Group also, despite their premium claim approaching 5.1, which is again the aggregate of this entire group. So with this out of the line, we now established operating profitability is really low in BYD. And but there's more to it. But before we go a step further, here again, the group isolated, here you can see the trend. We come from roughly 9% across this group to down 5.1. At first glance, some people might think, well, that doesn't look that bad, but think about it. When you go from 9% operating margin to 5.1, it means you lost 40% of your profitability roughly. If you earned before, let's say, 1 billion on a certain amount of revenue, you're now down to 600 million across the industry. So this is a huge loss in profitability. But it becomes more interesting in BYD's case, because what you're being told in mass media, etc., are different numbers, and I get to in a second why. This is what you're probably going to be shown in other places. So this is profit before tax margin. So I want to explain real quick what the difference is. So operating margin takes into consideration the revenue and all the cost for your operating business or the core business, so what you're really doing. But there are a bunch of smaller items. Typically they're summarized in the category non-operating items, and you always find that typically your finance stuff, so interest income, interest expense, which should be in a large industrial company, a minor item, and some other stuff, currency stuff related to currency fluctuation on different FX balances, yada yada yada. So nothing really major needle moving. But in BYD's case, it's a completely different story. When we add non-operating items, we double in Q1 the profit margin. We go from 3.3 to 6.6. And if you go back to this at 6.6, BYD looks really good. So what the heck is going on? How can they move through non-operating items so massively? And this is where it gets interesting. So first of all, we need to have some numbers in mind. Operating profit was only 0.8 billion, let's call it 800 million in the first quarter. Operating profit relates to operating margin. So you divide operating profit by revenue, you get to operating margin. And we have just established is very low, 3.3%. So what about non-operating items that I just mentioned? They are really huge. They're the same size as what the company makes with the operating business. So the purpose of the business generates as much as basically side stuff. So that's the interesting thing. And you can see, so here the pattern was normal. It was oscillating between loss making and some profits, not needle moving really in 2022. But then from beginning of 2023, exactly when the pressure in the auto market enormously increased, all of a sudden this item started to grow almost exponentially. It went from 46 million to 700 million to 1.4 billion. And this year alone, it already exceeded over 50, sorry, in the first quarter of this year alone, it already exceeded over 50% of last year's total. So, and you can see the growth rate here, 200% growth is something is going on here. So now let's decompose it. What's in non-operating income? And exactly what I just said. So here you see the four big buckets: finance and other. So finance is interest income and interest expense. Interest income on your cash balances and short-term investments typically, and interest expense on your debt. Impairments can be all kinds of stuff. I won't get into. Investment income can be some equity holdings, etc., dividends and things like that. Also, and you can see not a big driver, 97 million in investment income. Impairments were 102 million, a deduction, and then finance and other income, 300 million, moved up quite a lot, I may point out. But the big item is other income within non-operating items. So let's isolate other income. So watch the 459 million in the first quarter. So this is this number here. So now we just look at other income within non-operating income, and you can see how crazy this has grown. So first it was 253 million, 738 million, almost 2 billion in 2024, and this year already just under 500 million. So huge growth in this item. So, but again, we still don't know what's going on. What sits in other income? Now I have to jump from a quarterly, so this is quarterly perspective, to a yearly perspective. And the reason is I do not have this split on a quarterly basis. BYD only breaks this out on an annual basis. And on an annual basis, they tell us that, and remember this number, 1955? That's the total here. This total comprises 507 million of other. I don't know what other is. There is no disclosure around this point. But BYD tells us what the rest is. So there in 2024 there was 1.447 billion in government subsidies, and then some people might say, "Oh, this is the stuff Tesla gets. This is credit
Mm.
sales for emissions." No, this stuff sits in operating income. BYD also gets that in China and various other jurisdictions, just like Tesla. But this is a different, so this is an incremental other subsidy. And this subsidy, and I'm not joking, um,
Mhm.
BYD describes it as a government subsidy for, quote, daily activities. This is what they say. So this is, let's be clear. This is a direct payment from the government to basically prop up BYD, and we see in a
Mhm.
second why, and why this massive increase is not an accident, because you can see how this developed. And just to make this very clear, so if you um, add up all these annually disclosed direct government subsidies, so I'm just going back to 2013, so just over this time period, so it starts 110 million 2013, you add 130, we get to 240, you keep going. And so since 2013, BYD received direct additional payments
Mhm.
on top of all the CO2 stuff, etc. They received almost 4.2 billion in government subsidies, of which almost 1.5 billion last year.
Mhm.
And you can see how this has grown. Like, this really looks like exponential to me. So much quicker than even BYD's rapid vehicle sales growth, which already gives you some indication this is not really correlated. And so now we go further. Now we got to profit before tax, and I split out how much government subsidies added, and you can see quite a bit. So BYD in 2024 disclosed 6.9 billion in pre-tax profit, which is pretty good number, but over 1.4 billion came from government subsidies. So it makes a big impact. So, in terms of margins, here the comparison, if you strip out these direct payments, we go from the attractive 6.4% profit before tax margin to 5.1%. This is a lot. This might not look very much to a lot of people, but this is quite a lot. And so, anyways, but we are still not really getting to the
Mm.
to the bottom of it. Because we are still stuck in the P&L. This is now the bottom line, shareholders net income. So we are now at the far end of the income statement. And here you can see shareholders net income is okayish at just under 1.3 billion, but not that great. This is driven by this poor profitability, but this already includes the government subsidies. So if you strip it out, it would be much lower. So so long story short, when we look at the P&L, we see amazing growth, we see worsening efficiency, and we see really bad bottom line profitability. But this is not the end of the story.
Mm.
Now we really get to now we're getting slowly to the core problem. Now we look at cash flow, because there are various ways how you can gain profitability, and this is, I think, what BYD did, at least partially. But free cash flow is harder to gain. Here you see free cash flow. You can see that there are wild swings. Some quarters BYD has like very strong cash flow, like in Q4, 6.9 billion free cash flow, very good number. Um, but then a massive drop, 4 billion cash burn in Q1. So what's going on? Some finance people listening to this might, their first reaction is probably, oh, it's probably CapEx, because CapEx
Mhm.
spend can be lumpy. I have to disappoint you. CapEx is actually not fluctuating that much. It has been increasing, but it doesn't explain these massive swings, as you can see here. So the only thing that's left is operating cash flow. So operating cash flow is here, and you can see here. Here's the culprit. Operating cash flow saw crazy swings, and now we're getting really close to what's really going on.
Yeah.
So you remember BYD had these crazy growth numbers, and but the profitability is really low. And then on top of that, they had to sorry, I should not mention it because I'm taking something we get to it later. But anyways, so here's the problem. So they have here these huge swings, which tells you there's something off with the cash flow, because when you sell a vehicle, you tend to get the cash. But in BYD's case, what happened is they grew so quickly, and the sales generated so little cash that the cash flow was actually driven by not paying the supplier. And we get to that in a second. I can show quantitatively that this is true. And so basically, these numbers that you see, they're basically all fake, because
Mhm.
this operating cash flow was so high because they simply increased the amount of outstanding bills. And this drove up their average days payables outstanding, as we get to in a second. And and the other thing, before we get to that point, is this one. This one is very important. This is how much capital BYD is raising net of capital repayments. So let's say BYD raises 1 billion in debt and pays back that same quarter a maturing debt of 500 million. Here, this chart would show positive 500 million. So you see at some quarters, for example, in 2022, BYD every quarter paid back more than what they raised. So it was net negative. But in Q1 there was the largest ever capital raise of BYD. They raised $5.6 billion, and the reason why it doesn't say 5.6 but 5.3 is because there was 300 million repayments. There was a huge raise, and when you look at this uh, net financing cash flow, so BYD raised 2.5 billion, returned 2.9, raised another 1.8 net, paid back another 1.4, and now raised 5.3. So if you add up all these numbers, what you end up with is a positive number. That means there was no net capital return. So basically, BYD consumed more capital than what they generated. And And now we get to my claim I made before. The way BYD generated the cash flow was by basically forcing the suppliers to finance BYD. And the way BYD did it is they simply didn't pay them. So what happens is when BYD doesn't pay the supplier, they get the money from selling the product, the car or the batteries. This is cash in. But when they don't pay the supplier, this cash is then just pure cash that sits on BYD's balance sheet, and then BYD can show nice cash flow, as you saw in the operating cash flow. This is how it works. And when you look at this trend in first quarter of 2025, on average, BYD paid suppliers after 163 days. And when you look, I put here some industry peers,
Mhm.
SAIC, another Chinese, much lower, even by Chinese standards. Amongst larger automakers, BYD is an outlier. GM is much lower at around 70. Tesla is around 70. And we get to this in a moment. And people like BMW, they're more like in the 40s, or Honda. So very different. So let's compare this more directly, because this is important for in a little bit. So BYD pays on average after 163 days. Tesla, in comparison, pays after 72 days. GM 70 days, BMW 49 days. You can see in Tesla's case there's some fluctuation, and Q1 is always the highest. So I expect Tesla to come down to what's normal for Tesla, around 60 days. So this is just a mathematical thing, not worth getting into. But BYD had like a consistent upward trend. They've had long payment terms for quite some time, but it now kind of got crazy. I imagine you're a BYD supplier, you have to wait almost half a year before you
Mhm.
get paid. It's insane. And this is average. This means that some suppliers probably wait for, I don't know, 10 months before they're being paid. It's crazy. And but now this still is is not really tangible. This again is the free cash flow, and as we explored, it was not because of capex, it was because of operating cash flow, and as I explained, the positive operating cash flow was driven by not paying the suppliers. But we still, it's still kind of hard to understand. You will agree with me, Herbert. So that's why we now get really to the heart. This chart is now this chart, but going back way further and adding everything up. So this is just the quarterly number just for the last roughly 2.5 years, quarterly. But this one adds everything up. It's cumulatively. And I go back to 3Q 210, and this is not by accident. 3Q 210 was the first full quarter for when Tesla was listed. Tesla went public end of June 2010. So 3Q 210 was the first quarter. And I used this period to compare apples to apples, these two companies. So BYD reported cumulative free cash flow of $13.9 billion. It's an important number. But here's the problem. As we just looked at, BYD pays suppliers only after 163 days. So these trade payables, they're called, these unpaid bills, they're basically debt. Debt that is not labeled as debt in the balance sheet. It's called trade payables. If we try to create an apples and to apples between Tesla and BYD, we need to have the same days payable. So what this chart does, it shows you how much trade payables reduction on BYD's balance sheet is required to come down to Tesla's 72 days of payables, and the answer is 19.4 billion. So in other words, there is 19.4 billion of debt on BYD's balance sheet, for which BYD does not pay any interest expense. This is all borne by the suppliers. So this, of course, gives a huge benefit to BYD, but is extremely hard for the suppliers. And now we get to the next step. This is again the chart. So BYD generates 30.9 billion, but if you now pay down the trade payables debt to a level to be in line with Tesla's DPO, it's 90.4 billion. So you go from 30.9 total free cash flow ever generated, less what you need to pay down, 19.4 billion. And drum roll, the answer is negative 5.5 billion. This means since Tesla went public, BYD has never generated positive free cash flows on a cumulative basis. In other words, their entire business in the last 15 years has been loss-making. That is the dirty secret of BYD, and the numbers are irrefutable. So all these losses BYD pushed to suppliers. The numbers are totally clear. There is no ifs or whats about this. And now it becomes even more interesting, because people love to compare BYD and use it to bash Tesla. Oh boy, they really picked the wrong company. And this becomes very clear when we plot Tesla against BYD, cumulative free cash flow, and also adjusted for this huge supplier debt of 19 billion that has BYD over an apples to apples with Tesla. And this is what this chart shows. So the real free cash flow development, the cumulative free cash flow development of BYD is this blue line down here. So how the way this works is you take the reported cumulative free cash flow line, which is this kind of grayish line in the background, and you make a parallel shift. The parallel shift is that you move the entire curve down by the deficit that BYD accrued, which is the 19 billion that's necessary to basically come down to a trade payables level comparable with Tesla's business. And now you can see the huge difference between these two companies. And then some person might say, oh well, but Alice, AJ, you're only looking at at the last um, uh, 15 years, but BYD is an older company. And I went back even further, but now we are having like two different time periods. I cannot look at these years for Tesla because Tesla did not report in those years. And what we can see is BYD was also loss making in these years.
Yeah.
So long story short, on an apples to apples basis, if you compare Tesla and BYD, um, there is a rough over 20 billion cash
21.
delta,
Yeah.
because for the delta, you need to look at a 16 billion Tesla generated on a 72-day DPO basis as of the first quarter, and compare it with the negative 5.5 billion of BYD. Then you get to the real cash flow delta. And so it's over 20 billion. So these are two completely different companies. And even though BYD sells a lot more vehicles, it means absolutely nothing, because this business is simply not generating a lot of cash. And I'd like to add, this is despite the huge subsidies BYD gets on top of all the CO2 stuff. But it doesn't end there. It gets even more interesting. So now let's understand, how is it possible that this Chinese company with such huge growth and support does so poorly? The answer is, it's highly concentrated in an awful market. The awful market is China. And to give you an idea, people always look, because it's easy, at, oh, the market is growing so quickly, blah blah blah. This is all for rookies, if I'm brutally honest. You need to look at the product landscape, and this is what this chart shows. And here I'm just looking at the EV landscape and not even at the PHEV landscape. A similar story. So in January 2024, this is not that long ago, 1.5 years, not even 1.5 years, there were 168 models. Now we're at over 200 models. If we went back further, there were like less than 100 models in China. So there has been a crazy growth, and this obviously drove enormous growth in competition. But this is only the number of BEV models. Now let's look at the average selling price. As the number of models increased, the average selling price dropped. So this is not inflation adjusted. So okay, there was not a lot of inflation in China, but it would, okay, it doesn't make a big difference here. But the point is, just this year, average selling price went down by 9.3%. This is why BYD had to raise capital in the first quarter, because margin kept shrinking even further. And the fact that BYD raised in March before quarter end is also a huge red flag, because when they went to investors, they showed them much stronger fourth quarter, because in March there were no Q1 numbers available. And so they went on a roadshow for investors and showed them the Q4 numbers, and then Q1, as we know, just a couple of weeks later when it was reported, was disaster. So these investors were completely scammed, which is also a huge red flag, because as management, you don't want to do it. You don't want to burn your relationship with investors, and you don't want to create a bad track record, which means BYD didn't care, which means BYD was so desperate that they said, okay, F it, we need the money, and we try to make it right later, maybe, was their thought process. So this kind of, again, this is goes into the area of speculation, but if you follow the breadcrumbs, I think there's a pretty coherent picture. So next becomes even more interesting. So this is battery electric vehicle sales by manufacturer. And again, BYD looks awesome, dominates the market. Here, this is shown on a trailing basis. This is as of May. BYD sold 405,000 electric vehicles. Great. The number looks now even much better. Geely number 2, SAIC, General Motors JV, 185,000, and Tesla looks very poor, 141,000. And then you have a bunch of other just basically fighting for the spoils. I'd like to point out Xiaomi, which has grown quite quickly, but this would be a discussion for another video. So on this chart, Tesla doesn't look that great, but this is quite misleading as the next chart shows. This is the much more relevant chart. This shows the revenue. The revenue, on a revenue basis, Tesla is actually number two. They generate on a trailing 3 months basis, they generate 5.5 billion. The June was very strong, so it would be much better now. BYD still beats Tesla in revenue, of course, and but we will see in a second why, and why this is not a big deal. As BYD generated 7.2 billion, but as you can see, Tesla strong number two. Then Geely, remember that name, 4.4 billion. And then Xiaomi growing very quickly, already 4, and then a bunch of other companies. The German automakers BMW basically play close to no role, only make 700 million, yada, yada, yada. So now we look at this one. This one is key to understand the next part. This shows the number of battery electric vehicle models on the Chinese market. So the number of models. So Tesla, and this analysis only captures domestically produced vehicles. Tesla has only two, the Model 3 and the Model Y. BYD has 26, and Geely has also 26. Geely had even a lot more at some point, but some of the old, they retired a bunch of older products because they didn't sell anymore, and so they reduced. But Geely's model count will soon go up when they launch new models. And you see others like the SAIC, General Motors, GM has 19 models, the pure SAIC, so SAIC without JV 15, crazy. NIO has 11 models. Even BMW 6 models. So anyway, so there are tons of models. So remember now the revenue chart. The revenue chart is this one. So Tesla is number two, 5.5 billion versus 7.2 billion, and generates this revenue with just two models. Oops. And BYD needs 26 models. I mean, it should by now it should be clear to everyone why BYD's profitability is so awful and why they can't generate cash. Imagine 26 models, how much tooling they need, how many dies, how many injection molds, and all this stuff. It's completely insane. And that's why their vehicle volume means absolutely nothing. And the fact that they beat Tesla in revenue also means absolutely nothing, because they do it with a 13x larger product portfolio. This is anyways. But it gets even more interesting. So if we look at revenue per model, Tesla Model Y is still the number one most revenue generating EV on the Chinese market. Generated 3.7 billion, again on a trailing 3 months basis, as of May. And this number will be meaningfully higher as of June. Xiaomi, I have to really a deep respect. They're already strong number two with their single model, a sedan. So a model, a vehicle that is very similar to the Model 3, almost 3 billion. And then Tesla also has the number three most revenue generating model with a Model 3, 1.8 billion. And then it becomes interesting because we are talking about BYD here. BYD has only one model that just barely crossed the 1 billion line, which is the Seagull. And the thing you have to know about the Seagull is it's a cheap car. It's sold for roughly $9,000-$10,000. So and this vehicle class has very low margin. So the highest revenue generator we know is a very low margin product in BYD's case. And then the BYD Yuan Plus 800 million is the second best, most revenue generating vehicle for BYD, is also just a roughly $15,000 vehicle. And then the Sung Plus is just a roughly $20,000 vehicle. So all these top sellers of BYD which are still just a fraction of the Model Y, they're all in a much lower price segment. So even on a dollar for dollar basis, there's less profit likely coming out of these vehicles, because they're like the lower segment vehicles are notorious for really bad margins, and that's why OEMs always try to sell premium products, because it's easier to make money with them. And anyway, and then all the other BYD products don't really register. For example, you see here 6 BYD products, but as we saw in the prior chart, they have 28 products. So most of the BYD products, they don't even register in this chart, which shows like the top 17. Here down here you have beyond the top 17. You see there's a top rank 19, the BYD Han. Let's see, there's the Sea Lion, and then 26 BYD Seal. So anyways, so long story short, most of BYD's product portfolio is highly underperforming. So this was now a lot of stuff. I would stop here and give you a chance to react, Herbert.
Yeah, no, thank you very much for putting all that together, AJ. That's, again, the most in-depth analysis. And I like the way you compared it to not only Tesla, of course, but also to the entire industry, right? So what you've found out, cash flow negative ever since BYD's existence, never made actual cash. And then they hid that through government subsidies. But you're saying that government subsidy, people will say, like, yeah, but Tesla got it too. It's okay. Is that okay that they're getting government subsidies?
No, this is actually quite wrong, because the government subsidy I talk about is one on top of everything Tesla gets.
Okay. Yeah.
It's another type of subsidy. It's
for daily activities.
It's called daily activity. Tesla has no government subsidies that the government just in whatever jurisdiction just wires to Tesla for daily activities. And the other thing is, those payments, they sit in the cash flow. These are direct payments. These are cash items. This is not like a non-cash accounting thing. That subsidy, that is a cash item. This means if we stripped out those direct subsidies, the line that you see on this chart, the blue line, would be even a lot lower. And as we looked at earlier, over since 2013, they got just over 4 billion of those direct payments. So this means this negative number of 5.5 billion would be nearly 10 billion.
Yeah, so there's two big, amazing things you've discovered here, right? One is the government subsidies that is on top of what everybody else is getting. But the second one is they've been delaying days payable outstanding to their suppliers. And if you realize that it's 72 days versus, what is it, 100 or
163, so more than double.
More than double. They do not pay their suppliers for 163 days. And then they've actually sent a letter last month, 2 months ago, several months ago, they sent a letter to all suppliers saying, hey, we need you to reduce your prices by 10%. All of this, including the capital raise on March, these all point to something's going on. They're concerned. They're raising their DPOs. They're basically not paying their suppliers. And that shows them a positive number. But reality is they're at negative 5.5. And free cash flow is really the thing. You cannot hide that, right? Even Elon has said before, you can do all sorts of fancy stuff with balance sheets and financials, but free cash flow is what you're measuring for. And this is what you did. You normalize for that. If they did pay their suppliers to 72 days, like Tesla does, you'd have negative cash. Yeah.
19.4 billion is the bill that BYD has to pay to come on a relative basis down to Tesla's level. And I'm emphasizing relative basis. I'm accounting for the fact that BYD is a little larger. So I'm not even saying you have to go down to Tesla's absolute balance in payables just on a COGS basis, which is from a finance perspective the correct way of doing this. You have to. So I'm calculating this in the most friendly way possible for BYD. I just want to point this out.
So, AJ, is BYD too big to fail? China said there's no way BYD is going to fail. Now, we had the Great Wall, who's one of the top Chinese automakers out there. The chairman and CEO came out a month ago, and he said that he fears that there's an Evergrande scenario in China auto. It's pretty clear he's referring to BYD, a very big
Yeah,
company that is teetering
yeah.
on bankruptcy, but it's too big to
Um,
fail. China government will come in and save them. What is that
yeah.
you're thinking?
So BYD. I just recently returned from China, and I met with a bunch of supplier. And anyways, so BYD is BYD. BYD doesn't just have friends in the government. A lot of people in important positions, they don't like what BYD is doing, and they are still kind of scarred from the Evergrande
Mm-hmm.
experience and other stuff, because China has their work cut out. They have achieved phenomenal things. I mean, if you visit, for example, Shanghai, it's
Mm-hmm.
super impressive what they have done in the last 10, 15 years or 20 years. And but BYD has a long track record. When you study a company, I mean, that's why I'm an investor. I want to make money in market, and that's why I analyze this company, because I think it's overvalued.
Mm-hmm.
And and a part of the reason is because I strongly believe that when you invest in a company, you invest at least as much in the jockey as in the horse. And if you take the opposite bet, my opinion of the management is very bad, because the guy who is running um,
Mm-hmm.
BYD has a long track record of, I'm not going to go into details, but let's call it some questionable things.
Mm-hmm.
And and that's why I think the too big to fail is a different story. I think the Chinese will not let it just go bankrupt, but there are ways how they can basically cut their wings. They basically can tell them, look, you're not going to sell more than 4.5 million vehicles or something like that, and they can do it like in an instant. And then well, BYD then will scale down their production plans and everything.
Which they have
And
announced, didn't they? That was just
yeah,
not announced,
exactly.
but there was reports saying that
Yeah,
they've scaled down production lines and they are no longer
yeah.
going to build
And
factories.
so what I just said may actually have happened. So that there was a
Yes.
government official told them, look, you can't grow
Yeah.
more, or and that what typically happens, then this goes on, they cut you down more, and then in 2026 you just make 4 million cars. That's it.
Mm-hmm.
And so anyways, so this is complicated. The Chinese culture is tricky. I lived there for some time, learned the language. It's a different world. But I don't think this is like, because I think my impression often is when I read the media here, people make it out like this, oh, this Starling, this Chinese
Mm-hmm.
auto champion. BYD doesn't just have friends in China. This is my point. And I'd like to point out the other car companies, the large ones, Geely, Chery, and a bunch of others, GWM, SAIC, they also have relationships in China in the government, and they're all completely against what BYD is doing. So BYD is and BYD basically leapfrogged everyone. So I think the greatest enemies, they're not outside of China, they're in
Mm,
China.
yeah.
And so and I think that right now the competition in China is not Chinese against foreign brands. No, it's really Chinese against
Against
Chinese.
Chinese.
The only
Yeah.
one that can hold water, or to tread water, sorry, is Tesla. It's the only
Yeah.
company. All other companies, all foreign companies, they're really performing horribly, and that's why people always get like scared. Oh, Tesla's sales are not growing rapidly anymore in China. Look, if you knew what I know about the market, you would be actually quite impressed,
What
because
they accomplish. What's your
Tesla.
thinking about the other thing everybody's been saying recently is, oh, don't you realize BYD is now going to have their version of autopilot, their self-driving cars. They're called God's Eye. They're going to apply to all of their segment cars. They made that announcement. Tesla's toast.
Um, I think these are always, as usual, always complete oversimplifications. Um, do I believe that Tesla will have in China the majority of the market share in autonomous vehicles in 5 years? No, absolutely not, because it makes no sense. Do you think? Imagine how realistic would it be to have Xiaomi have like a
Hmm.
meaningful market share in the US or in Europe? It's inconceivably for geopolitical reasons, and the Chinese. Um, there's a much bigger thing. I think the investment community doesn't like to talk about, but I think it's actually much bigger than this when it comes to Tesla and its future ambitions. People always look at the phenomenal market cap growth in the 2017, 18, 19, 20, 21 period, and but what they forget is that at the time, like 2017, 18, 19, when Elon made a future product announcement, okay, we built huge battery factory and we built so many million electric vehicles, people laughed about him. uh, Auto company CEOs laughed about him. They ridiculed him. There are tons of examples you can find online. I lived through this entire period analyzing Tesla. I still remember a lot of it, and this has completely changed when Elon now makes a statement, and it can
Hmm.
sound as outlandish as you want it to be. Everyone will take him extremely seriously, and I can tell you right now, if Elon announces a walking
Yeah, yeah, yeah.
dishwasher,
I get you. I get you. I get you.
uh,
They'll believe
the
them. Yeah,
same day
yeah.
teams in China
We'll start building
will
it.
be
Yeah,
coming up with blueprints and start working on it, and people will create special like skunk work teams
yeah,
to try to copy something what Elon just laid out. For example, when Elon announced Optimus, that was already in a period where no one, at
hmm,
least not anyone with a brain, would be joking about Elon. And basically the day Elon announced Optimus, everyone got focused on humanoid robotics. And just a few years later,
yeah,
this is the reason why Jensen Huang just last week or a week prior was in Paris with a bunch of not CGI but real humanoids, because when Elon announced Optimus, immediately the world started working on humanoids, and so what I try to convey is a lot of companies have been working on FSD. Yes, they are nowhere close to where Tesla is right now, but you also have to keep in mind, if Tesla started today with today's compute power that's available from people like Nvidia and others, and also the advancements in the understanding of how to build
yeah,
AI. If Tesla started today, they probably could make an FSD
yeah.
with less
Pretty soon.
data in
Yeah.
12 months.
Right, right. Yeah.
Maybe not
That's
as
right.
good as the version right now, but the point I'm trying to make is that the degree of difficulty and the caliber of talent you need, and the timeline has compressed enormously. So when Tesla next year has perfected FSD and it's cybercab ready, we're 2026. So Tesla then worked roughly 6-7 years, depending on when you start counting, on that system. If Tesla repeated everything, they would not need more than 2 years. And given what's going on and how serious everyone takes Elon, it's not reasonable to assume that a well-funded follower takes also 6 to 7 years. It's also not reasonable to assume they will start when Tesla's is perfected. They will have started a few years ago, and in some cases you may not even have heard about them until very recently, even though they worked on it already for a few years. And again, compute becomes day by day cheaper, and Nvidia and others, they make more and more
Hmm.
powerful compute clusters. So I mean, in 2040, probably a
Yeah.
smart high school student can make FSD on
Mm.
his stupid phone.
Yeah. Yeah.
or maybe
Understood. Yeah.
2021. But
Agreed. Yeah.
you get my point. Yeah.
Yeah. That's great.
Anyway.
Okay. But that's why manufacturing is so critical, and
Yes.
doing it profitably is critical. That allows you to scale. If you can't do it profitably, yes, you got BYD scaling, but they've kind of hidden it. So they can only do this shell game for a little bit longer. Whereas Tesla could truly scale because they can make money. So they can just keep throwing money at this and making more money. And then who can build the most? Now, that's actually a funny thing is that if BYD does find a way to get robotaxi or self-driving, maybe that is how they then turn into a profitable, cash flow positive company.
Yeah, I think in the future, an autonomy feature, I think will become like airbag. It's like part of every car.
That's right.
And then further down the road, there's look, you won't even be able to buy a car
without
that
it.
you can drive. There are no steering wheels, no pedals, and then a large chunk of the consumer base will just go to ride hailing. They don't own cars anymore, and the wealthy they will have their luxury cyber cabs, whatever. There will be versions of that, of course, and then like just like people still keep horses for leisure, there will still be V12 Ferraris and a V8 Ferraris and whatever in super sports cars, but it's not going to be a mass transport, a mode of mass transport anymore. I think it's quite clear with how it's going to unravel.
All right. Well, AJ, thank you very much. I love the way you, first of all, use the data to tell a story, and it's riveting. And you landed it with several, not just one, but several gotcha moments to BYD. It's important for people to, like you say, not just look at the top line, dig a little bit closer, understand what's actually happening, and then understand that tells you what's going on in the entire market. And then you can see who's going to win, who's not. Thank you very much, AJ. So you should follow AJ at his X account. You can subscribe to him at ALOJOH. You can see that right here. Subscribe to him and you get that data way ahead of everyone else. And you can see he spends a lot of time on that data, 50 plus charts for just one company, sometimes hundreds. But you need to, right? But you need to like really look at it from all these different ways to try to understand how one company truly, what's working. And then you can spot the trends ahead of time. You can say, this is something's weird going on. Thank you, AJ. Yeah. Thanks, everybody.
Thank you very much. Thanks for having me, Herbert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.